Okay, welcome everyone to our sixth installment of the Borak series. It's already festive season. Everybody's at home already making ketupat and rendang. Today, as my appreciation to all, we have not just one, but two very special guests today. First, we have a rising star from our equity and commodity derivatives department, Mr. Tucker Cheah. Welcome to the show, Tucker.
Thank you very much for your kind introduction, Naguib. And also thank you for having me for the sixth installment of this Borak series, right? So, hi everyone. Just allow me to quickly introduce myself. My name is Tucker, and yes, I'm a proud member of the Structured Warrants team here at Equity and Commodity Derivatives here at Maybank Investment Bank. So I just believe that in all markets, the trend is your friend until it bends at the end, right? And I will leave it to Nik to discover the trends in the market through the lens of technical analysis. But I'm here to share with you the tools available to you in Bersama Malaysia market in order to capitalize either the upward trend or the downward trend. So back to you, Naguib.
All right, thanks a lot. All right, also, not to take all the shine away, returning guest, our senior chartist Nik Ihsan. We've seen him on all the other outlets speaking about charts specifically, but right now we want to give him an opportunity to talk about some of other trends out there. So how are you, Nik?
Thank you, Naguib. Today's good. Thank you for having me. I think about chart, we're going to talk about a lot of the things, particularly on the US stock, VIX, and so on. But today I'm feeling, very good. You see our market also recover. So yeah, the sentiment is coming back. I think, that's helped a lot, particularly within our what we call that so-called weaker sentiment of late. So I think by right, the mood also swing along with the market. If market go down, I think the mood also a little bit, weaker. And now as the market start to come around, I think the mood also feeling a little bit edgy. Of course, we're also nearing Raya as well.
Okay, so the ketupat season is coming, but never mind. Okay, all right. So no particular order. I think it's something that we want to focus on, Tucker, on the ECD team. So sitting through some of the webinars you hosted last week, we understand that it's been quite a development that even our competitors are not showing. But you have started to offer more opportunities for our investors to trade overseas, namely the US, which is US, we've got Hong Kong. For the benefit of our audience here today, could you just basically run through what you've prepared recently for those two markets?
All right, sure. So I think going into April, right, coming out from the month of March, where the financial crisis in the US as well in Europe, we decided to expand the market coverage with US share structured warrants, given the backdrop of the financial crisis, inflation, and also growing recession fears, right? So given that structured warrants have also become increasingly popular among retail investors, and also with the addition of US listed warrants, we have also received even more interest and curiosity from the investors in Malaysia. So with this issuance, right, where we just issued last week on 12th April, this makes Maybank IB the only issuer in Malaysia for a ringgit-based warrants over New York Stock Exchange listed companies. So this launch that we did on 12th April comprised of a 3-pair call and put warrant over Bank of America, Citigroup, and also the first ever warrants in Malaysia over Wells Fargo. So this allows investors like you, right, to capitalize on their views of the top 4 largest banks in the US by total assets. So given the recent earnings results announcement by Citigroup and Wells Fargo on 14 April, last Friday, and also Bank of America results announcement coming in last night. So investors who wish to exercise their bullishness or bearishness can consider the 3-pair call and put warrants over these names by Maybank IB.
Great, Tucker. So right now, and explain to basically the audience the benefits of trading to structured warrants, especially in the foreign market.
All right, sure. So earlier, Naguib has also mentioned that there's call and put warrants. So for these warrants, right, regardless if it's a call or a put, there is something that is called the exercise price. So the exercise price is actually predetermined during issuance, and also expiry date as well is also predetermined. So how do you know which structured warrants to use in a bullish market or a bearish market. So for bullish market, it's actually a call warrant because it allows you to capitalize on the upside. Whereas for a bearish market, is put warrant because it allows you to capitalize on the downside. So with structured warrants listed over foreign listed stocks, this allow investors to gain exposure to the foreign market with a much lower capital outlay. So this is also one of the attraction or benefit of structured warrants because you don't need.
Sorry to cut in there, but basically what you're saying is that, I mean, I don't have, to buy a full lot of money to buy Amazon or Google. So right now you'll probably be able to buy bite-sized position into these companies.
Exactly.
Right.
So all in all, in a nutshell, the fantastic 6 advantage of this US share structured warrants are firstly, leverage with no margin call. Secondly, lower capital outlay, like I've mentioned. So this also means that it's cheaper to purchase. And thirdly, the best part is that profit from either direction, given the call and the put. And also number 4 is limited potential losses because why? It is only limited to the capital that you have put up. And for the 5th point, it's a share replacement strategy. You can think of it in a way like Naguib mentioned Amazon, right? So imagine you had an existing position over Amazon, but you've already have some unrealized profit that you would like to take. So you can sell some portion of it and use the structured warrants over Amazon to gain or continue to have the exposure over it. And also lastly, obviously, since it's listed on Bersama Malaysia, it is traded and settled in Malaysian ringgit. So this saves the hassle of having to convert into US dollars, as well as staying up to trade the US market during the night in Malaysia.
Yeah, don't worry, we don't have to also queue at the mama to go and change, dollars and Sing dollars and all that.
Right.
But okay, no problem. Thanks for that, Tucker. So again, I used the word Google and Amazon, but again, just going back to the issuance that the guys at CD has come up with, it's basically the banks at this current point in time, Bank of America, Citigroup, as well as Wells Fargo. So we've heard Tucker on his views on the product that is being sold, but right now let's try to see where these underlyings are headed via our charts. So Nik, can you tell us a bit on how the US markets are looking at right now?
All right. Okay, let's take a look at US market sentiment. At first, we're going to take a look at VIX chart. So I'm going to open up a VIX chart. You can see on the screen right now. Okay, this is the chart that we highlight before in our report, presentation, and so on. So the VIX chart is something that we call a fear index. Whereas if the VIX goes up, the index in this particular market will be SPX, S&P 500, will go down. Now, if you look on the chart, this is a 3-day chart for VIX index candlestick versus S&P 500. S&P, you can see on the chart, was the green color over here. So as we highlighted before, the spike in the VIX index has sent the so-called S&P stage some sort of the correction move, but the corrective move, however, was pretty much, I would say, mild, given the so-called the structure since October low is pretty much intact. We've seen a new high structure for S&P, but the VIX spike in VIX recently did not even break the S&P 500 support level. So that actually considered a good sign. Now, as the so-called concern about banking crisis has been subsided, you can see the VIX index now has edging toward the major support zone. This is something that we have not seen since November 2021. If you recall, during March until November, we've seen a strong rally move in S&P earlier. So perhaps this could be repeated again. As for now, we did not know, but we do know that the sentiment is improving. The in general, overall volatility has been eased and about to enter the major support level. So if this condition prolong, I mean the lower period of the volatility going to prolong, that means we could see a stronger movement in the S&P 500. Now, if you okay, like, can I flip through what we call the S&P 500 chart?
Of course, go ahead.
All right, now, so if you take a look at the chart, S&P 500, what you've seen the so-called the downtrend channel since March 2022 has ended after the index has actually taken out the so-called immediate resistance right within at 4,000 region. So we see a new higher structure was formed, and the immediate support at 3765 was pretty much intact. Trading volume has been improving. You can see it's well supported, and the index has been generally trending upward, currently trading above 13, 33, and 88 days moving average. Momentum also decent. RSI continue to trading above 50-point marker, while the D trend is pretty much on the body territory. So as you can see here, in terms of the sentiment, it does look like the index has more room to go up further, and the immediate resistance that we are looking at is right between 4,200 and 4,320. That means we should see at least few more percent upside, at least in near term. That's for S&P 500.
All right. Okay. Thanks for that. So basically, we've covered S&P as well as VIX, and I think generally what Nik has kind of mentioned that the trend, apart from some of the challenges, is generally on an uptrend. I think that has also been, I guess, been discussed as I guess global stocks has staged kind of a bit of a slight of rebound versus with all the the noises with the banks that we had earlier a month and a half again. But having said that, I guess it's corporate earnings seasons again, guys. So I think it's interesting to know the I guess first quarter is actually another barometer. Okay, very quickly, I think right now let's go back to the context of this on how we can tie this up with opportunities that we have with our structured warrants. Maybe your views, Nik, on Bank of America, Citigroup, and Wells Fargo. And I guess, Tucker, if you want to chime in later to see in between the three, what would potentially be something that our investors be looking at the current moment. So go ahead, Nik.
All right, I think this is interesting because we have such a warrant to capitalize the short-term movement for the stock. Because the stock, if you look on the chart, while it does look like quite promising in terms of the rebound, I do think the upside could be kept, particularly on the banking stock. We are seeing the stock, Bank of America, currently trading in the downtrend movement. It has broken the so-called the major 200-day moving average and been trading below those levels since March last year. So for the past 12 months, the trend is pretty much on the downward. The good thing is there are significant rebound move for the past few weeks, and that actually give us some at least more room for short-term trading. Now, the gap up that occur for the past 2 days, I think could face some sort of the what we call resistance, particularly within this so-called candle at $32. $32 is pretty much a strong resistance level, whereas if you draw a simple Fibonacci level, you can get a confluence of the resistance right within at $32. So $32 also see as a 100-day moving average and 200-day moving average. So as for now, I do expect some sort of resistance as the stock approaching this particular level. So if you having in the money, I think the level that you should think to take some profit will be this level. Because long-term target, I think long-term trend is still pretty much on the downward. So be on the lookout if you see any reversal signal, particularly within at 32 toward to 33 US dollar. Now, for Citigroup, it is paying a similar story. However, it was indeed right within the resistance level already. So on my left over here, you see a quite thick volume profile. You can see there's number of the accumulation being generated within this particular zone, and the trend, this is the long-term so-called downtrend line that I draw before. So you can see how the stock actually approaching this critical level. So I know it just break above the 200-day moving average, but given the so-called particular trend, it's still pretty much tricky. So I'm expecting some resistance, at least in immediate term, we need at 51 US dollar. Failure to break on this zone, you could see the stock create a new low, hopefully a new high-low structure, and perhaps retesting this line again. But in a nutshell, I think long-term trend is still pretty much down, and if the stock capable to break beyond $51, and the next resistance should be lies within 52.5, $56. So how are we going to pay out for the short-term trading? I think for those who want to buy, they should be looking to buy at least much lower level. Any pullback within at 46 to 47 could provide a decent entry. And if you're looking to sell within 50 to 52 is a good level to sell, particularly when you are approaching a major resistance level. Since I think for the past few months. Now, last but not least will be Wells Fargo. Wells Fargo, in terms of the rebound, is actually similar with Bank of America, but the quantum of change it will be much more weaker. You can see how the stock is actually rebounded off right within at 38.2 Fibonacci level, yet to hit at 61.8. That means there are more room for further rebound, at least near term. Regardless, the strong gain last night was backed by high trading volume, but it's not as high as before. The momentum in general has been improving, but again, I'm expecting some sort of resistance, particularly at within 200-day moving average and the major 61.8 Fibonacci level. As you can see, a very big candle here could provide some of the resistance, at least near term. So if you, again, in the money, at within $43.5 will be a critical level for you to think to take some profit off. Or if you want to re-enter, I think it's best to take at a much lower level, particularly within at 38 to 39 US dollar. So as for now, trend for the bank in general is still on the rebound, still ongoing, but now is approaching the resistance level. So be on the lookout if they're seeing any reversal signal ahead.
Okay, sorry Nick, just quickly again. So for to be clarity, the resistance that you see for Wells Fargo is at 44, right?
44, yes, correct.
44. And what about what about Citigroup?
Citigroup at 51 and $52. I mean, I give you the zone, 51, $52. And for Bank of America, right within at 32 to 33 US dollar.
Okay, all right. Okay, great. That's a fantastic, I guess, analysis. Very quick, but in a nutshell, just be giving our guys, our audience out there, some color and basically how they can see that trend and tie it up to the structured warrants that the Tucker and team has already issued. But again, thanks everyone. Again, that's all the time we have for today. So thank you for both Tucker and Nik for sharing with us today. Just any parting words before we sign off? Tucker? Yeah.
I think just like Nik has mentioned as well, there is a trend in the US market right now. But regardless of the trend, whether long-term or short-term, do always exercise caution, because if any lessons has come from the pandemic and also the financial crisis turmoil in the US is that you don't know where the risk will come, and always be cautious when it comes to investment.
I'd like to add on what Tucker said just now. Sure. I think one thing that's good that we also offer not only call but also put option, right? Then I mean any strategy that you can put out in this current market, volatility could help, particularly when you see if there any spike in terms of the volatility again, then you perhaps want to consider on the put option. For trading, is always approach the market with what we call that adaptive kind of strategy. Adaptive mean if you've seen significant change that could alter the market direction, then we have to adapt our so-called strategy along with the market. That's how we want to survive, because whatever it is, market is always right. So we need to adapt our strategy. As long we follow the trend direction, I think we'll be on the safe side. All right, so all the best everyone.
All right. Thank you, Tucker. Thank you, Nik. And to our audience, to everyone else, you can get the latest market news and research from our social media channels, i.e. Telegram, Trade with Maybank, our LinkedIn channel, and even YouTube. Or you can also reach out to our digital sales team or our sales representatives out there to find out more about our services. Also, if you have enjoyed today's Borak session, do consider dropping us a like or even subscribing, and we'll see you at the next one. Till then, this is Naguib Hussin mengucapkan Selamat Hari Raya Mauzai Batin to all our Muslim audience and safe travels. Till the next one. See you.
do 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 do